Good morning and welcome to the 5th edition of the NSE LSE Dual Listing Conference here. And I was here last year, and since last year, a lot has changed. You could say Nigeria has turned a corner. We're out of the worst recession in 2 decades. I think that deserves a round of applause. I'm happy about it. I don't know about you. The NSE is now the 3rd best performing stock exchange in the world according to CNN, and I think that deserves a round of applause.
Over the last few years, Nigeria's economic landscape has been particularly challenging the capital markets. The combined effects of the 2015 national elections, slump in commodity prices, economic slowdown, recession, and FX market illiquidity have resulted in a dread of initial public offerings or IPOs in the Nigerian capital market. Nigerian economy exited recession with a marginal growth of 0.83% in 2017 and is expected to grow by 2.5% in 2018 based on the World Bank's projections. I have no doubt that we will be better positioned to attract the pool capital required to drive the country's much-needed economic reform and sustainable growth.
The relationship between Nigeria and the United Kingdom is a strong one and a historic one. And it is set to become even stronger in the coming years. Bilateral trade, currently at about £3.8 billion per annum, is forecast to reach £7 billion by 2030. And as Africa's biggest economy, Nigeria offers many, many opportunities for investment, expansion, and partnership.
And indeed, the UK government has a shared interest with the LSE to support the power of the City of London to channel more investment in Nigeria. And this is the first time that I see the convergence of 2 phenomenons. One, a renewed focus on Africa across the British government and across the 3 internationally minded departments, namely the Foreign Office, the Department for International Trade, and the Department for International Development. I know that collectively, by the end of the day, we will have had thoughtful deliberations and considered innovations that will strengthen capital market partnerships between our countries. I look forward to these discussions, and I wish you a very good day.
There is depth to this economy. The enthusiasm about it is not misplaced. And now we have to bring it together in a way that's coherent, in a way that's modernized, and in a way that's transformative. Which leads me to my second point, and that is the capital market. We should support what the Nigerian Stock Exchange is doing, support the dual partnership with the London Stock Exchange. It matters, and it matters hugely for the global economy, for the African economy, and for the Nigerian economy growing forward.
Nigeria is capital deficient, and therefore we need to be able to mobilize capital, local, international, into sectors such as infrastructure.
This event is even more significant as it creates a vital opportunity to further deepen the connection between the Nigerian and the London markets. At the Nigerian Stock Exchange, the recently created Corporate Governance Index was targeted at helping companies to distinguish themselves with the label of governance excellence. I'm confident that the outcome of our discussions today will play a vital role in enhancing investor confidence in our capital markets.
Between 2016 and 2017, when this government came into office, what has she done? She has increased capital expenditure. She has increased spending on roads, on rail, and on airports, especially largely through budget, I agree, and at a time when she's earning less from oil. And in the last 3 years, we've grown production of power from 4,000 to 7,000. So we've averaged an increase of about 1,000 megawatt per year. Those are the current trends. And those are the trends you must choose whether to keep or to change. Thank you.